Okay, guys, we are live. We are ready to get going. Apple released its new product line for the new year. What did they do? They put a action button on the side of the camera instead of a switch. They might have added a few megapixels to the camera. Who the heck cares? Nobody cares. I mean, maybe if you're an Apple groupie and you get really excited by these product events, but everybody in America doesn't care. Nobody really cares. So you get these big events, they hype them up big time, they make you think there's going to be all these new product launches and everything, and then all of a sudden they don't do nothing. They do an action switch. Like last year was the dynamic island. Like everybody is really still reeling from that big announcement. No, nobody cares. They don't really come out with new technology. They're just keeping the status quo going. Yeah, people will still go out and buy the new phones. Is it worth it? No. I mean, unless they're throwing it to you for free or your battery's dead, is it worth it? Absolutely not. But here we are. So, like what we see on most of these product launches, Apple tanks and it takes down the whole market. It gets really frustrating too, just from a swing trader, because hey, I have some good swing trades going on, but because Apple, hypes up these events beyond absurdity, and then the market's disappointed when they're not curing cancer from the event. Yeah, then all of a sudden the stock plummets. So what are we looking at from a technical standpoint? Let's go to the charts. I'm going to go ahead and look at the Apple chart. Also wanting to talk a lot about gaps lower, specifically what to do, how to play them. Should you play them when you have a good stock that gaps down? Going to talk about that. Also, make sure that you are posting your questions, your comments, your thoughts. What stocks do you want me to look at? What charts do you want me to look at? I'll make sure I tackle them all on this Q&A live stream. I love hearing your questions. I love hearing your charts that you're struggling with or want some thoughts from me on. It actually helps me out quite a bit because I get some good trade ideas from you guys as well. So make sure to do that. Also hit that like, subscribe button watching it on YouTube, because that also helps me quite a bit to grow the community. And these live streams are only good when you guys are participating. So make sure to do that. We got Black Mamba. Good to see you here. And let's go ahead and look at the Apple chart here. When we're taking a look at this Apple chart, what do we got? Well, you may have a new trend line that's starting to develop here, and it's kind of a funky trend line. This goes back to the beginning of March, before the whole regional banking crisis started, and you've got a little bit of a support here that's happening here off of the August lows, and then again here off the September lows. We've tested it twice in the last 4 days. It's held up each time. It held today. So there's the potential for a bounce opportunity. Obviously, you had this big gap here, and if you tried to play it immediately, you're probably losing money right now because of the today's sell-off. So the gap is definitely not something you wanted to play. What we want to look at right now is whether or not it can bounce off of this blue rising trend line. If it can't hold that, where I think Apple is going is to a retest of this huge level of support. Now, this level of support was once resistance, and it was some nasty resistance. Every time it got up there, it saw massive tops in the stock. I mean, the time that we tested it back in March, it goes from 179 all the way down to the 120s. That's pretty significant. That's like a 30% sell-off. Then again, we tested it back in August of last year, and at 177, we saw it decline all the way down to October of 123, another 30% decline. But not to be thwarted, guess what happens? Back in January, it finally bottoms, and it just goes on an epic tear. It breaks through resistance and keeps on climbing. One of the most impressive trend lines of the year. So the potential is there for a retest if it can't hold this blue trend line. And I think that could be a good support level for Apple going forward. It's definitely one that I would be looking at from a bounce opportunity in this market. So if it does do that, it's going to take a lot of the NASDAQ down with it, because Apple's a $3 trillion stock almost, and it has a lot of influence on the broader market. So keep that in mind. Now, you had this breakout pattern here, and this is a little bit of a concern because you had this nice basing pattern following this gap lower, and then it breaks out and then retests it back on Wednesday of last week, gaps below it, and it can't hold it. So right now, this blue trend line is really all that we have left. So if it does give us a bounce, though, what am I looking at for potential resistance? I would look at this white line here. This goes back to the July highs. There's not a lot of history with it just yet. It's tested it early on, and then it got close to testing it back in early September of this month. but it hasn't been able to retest it again. But that would be somewhere around this 191 line going forward. If the red lines can't hold, the blue lines can't hold, where do we go? Then you have this little breakout level right here. This would be down in the 155, 156 area. I don't think that's in the here and now, something to be really concerned about. So I'm not watching it. But Apple has definitely changed its tune from this rapid trend line here that saw it go from 122 up to almost $200 a share. Completely different now. You've seen a significant pullback. And one of the bigger concerns here as well is with this blue rising trend line. A lot of people, will be starting to watch this level here because it's held the last 3 times it's tested. But what I don't like is the fact that it has put in a lower high. And a lower high suggests that it didn't have the momentum to take out the previous highs and keep this fantastic trend line in place. You could have made the argument that this wasn't necessarily a trend line break, but more of a flattening of the trend line. But in order for it to be a good trend, it needs higher highs and higher lows, meaning the new highs are higher than the previous highs, and the new lows are higher than the previous lows. So you have higher highs, higher lows. You do have some higher lows, but you don't have a higher high. You have a lower high, and that's a problem for the stock. So keep that in mind. Watch this declining trend line here, this white level for resistance going forward. Watch this purple line, because if it rechallenges it, it could see some pushback from the stock. And then watch tomorrow to see whether or not it can break through this or hold this blue line. If it breaks through it, then you got this red line to contest with here of major multi-year support going back to 2021. You also have the CPI report tomorrow, and the CPI report is going to be huge. It's expected to come in at 3.6%, and last month came in at 3.2%. Obviously, you got oil trading at almost $90 a share. So August's CPI report, it's going to be coming in hot for the reasons I just mentioned with oil. But are they really stating enough of the impact that this rise in oil is going to have on pretty much everything? Produce, heating your house, utilities. It impacts everything. Anything that you have physical in your home requires oil to at least get it into your home because of transportation costs. And if not just that, if you want to stay cool, if you want to stay warm, you need oil. If you want to grill, you need gas. So all these things are, intricately intertwined. And the CPI report tomorrow is going to go a long ways in saying how much is this inflation being impacted by the price of oil skyrocketing here. And how are we even talking about being done with raising rates for the year? We should be raising rates in September and November. We should. It's actual lunacy that we're not even talking about doing it both times. And we probably should be doing it at a half point or 50 basis points each, because clearly the oil is not being tamed. And if you don't tame the oil, nothing else really matters. So, and you don't really have inflation under control because you're not able to get the demand down for the oil. Oil wouldn't be this high if the demand wasn't that high. You got to kill the demand. If you kill the demand, the price of oil will come down. So that's that. Make sure again that you're putting your likes and subscribes into the YouTube. Also, make sure to post your stock questions if you have any. The next thing that I want to talk about, and we have some Apple comments here, so we'll address them right now. Black Mamba sold Apple today. Statistically, she goes down after the event. Yes, she always does. And here's one of the things that I don't really quite get about the event. If they're hating the product lines that they announce every year, why do they keep upgrading the stock? Why are they upgrading it constantly? You can say, well, people are buying it. Yeah, but it's also trading at an incredible PE versus its historical PE that it usually trades at. So there's this huge price expansion where everybody on Wall Street is wanting to buy an Apple, but they want to hate the products. And it doesn't really make much sense to me at all. But Black Mamba also thinks it goes down to 165-ish. That would be just around this red line here. So I could see, that pullback to that level there. I think it's going to cause a lot of problems for the overall market. And you may have a good point. So, we have the election coming up here. Historically, the market does better in the third and the fourth year than it does in the first and second year. But then you take like the Trump years, or you take Bush's fourth year. In his fourth year, you had 2008 Great Recession. 2020 with Trump, you had the whole shutdown, lockdown, and it caused a lot of problems there. Now, Let's talk about gaps. Let's talk about gaps because they're very important in terms of a lot of traders, especially new traders, like to buy them as soon as they see a stock sell off dramatically. We were talking about Apple, and I want to go back to Apple. Apple has had a series of gaps, and there's a lot to learn from on these. Let's go ahead and pull up the chart on Apple. Here, you have this significant gap down. I'll draw it right here. Now, a lot of people see this gap down. They're thinking to themselves, this is an incredible buying opportunity. I need to go ahead and get into it right now. And when they do, the stock continues to drop. And then the next day it drops. So then all of a sudden they're bag holding, and they're bag holding unnecessarily. You don't need to buy a stock just because it has a gap down or because it has a significant sell-off. Rule of thumb is that it's probably going to take a number of days for it to finally settle in. Yes, there's the rare cases, and I'll show a couple of examples where it's different, where it actually does rally right off of the lows, but more times than not, it's going to take a little while because it's a very negative event that's causing it to sell off. And as a result, it needs to price in the ramifications of that negative event. So with Apple, you have a sell-off, you have the follow-through. Again, if you were buying on this day or this day or this day, you're still losing. So you're not making a lot of money. What you want to do is wait for some kind of a basing pattern to unfold. We get so caught up as traders in trying to nail the bottoms, trying to get in at that very low tick, that we end up bag holding more times than not in search of that 1 or 2 extra percent off of the trade. What we really want to be going after is the meat and potatoes. We don't need to get into the bottom. We don't need to get out at the top. We want that middle section of the rally. That's the most important. If you try to get in at the bottom, you try to get out at the top, you're usually going to be getting out at the worst possible times and getting in at the worst possible times. So with this, you got a breakout level that finally started to emerge. You had a basing pattern and it broke out, and it gave you a good 4 or 5 days to the upside when you played this breakout. That's the kind of basis that you were wanting to look for. And then when you get the sell off, of course, you have a stop loss in place and you get out of your trades. Here again, we have another gap lower on Apple. And so a lot of people were buying into this thing back on Thursday of last week. Was that the right decision? No, it wasn't the right decision. Yes, it rallied off of the lows. It rallied off of this trend line here, this blue rising trend line. But while it held for a couple of days, the price action was sloppy. There wasn't a lot of conviction. And then here you got this major event that sells off again. So now you're once again bag holding, trying to play this balance off of the September lows. What you really want to do, and I see your questions there, I'm going to get to them and look forward to going over Meta as well. Well, I shouldn't say I look forward to it. Meta's a sore spot for me right now, but I'll get to it here in just a second. But Apple had the gap lower. It bounced, hit this 20-day moving average. Now what you want to really see before you get into Apple is not so much can it get into the gap or whatever. It's nice when it gets into the gap. It doesn't have much of a gap to fill, but you want a basing pattern here to start to form. If you can get a basing pattern, kind of like what you saw right here back in August, then you have an opportunity to get long, but you can't get long on it just because it's opening lower. A lot of people think that they're being like a hero in their trading by getting in when everybody's getting out. I know there's that popular Buffett expression of being fearful when everybody's greedy and greedy when everybody's fearful. But when you have that initial fear, that fear can take you a lot lower than you would have ever expected. Let's look at a couple other stocks. Let's look at RH. This is another good one here. This one's starting to sell off here. If you would have bought on this initial gap, or even if you use this like second day bounce, was that the right time to get out? No. If you put your stop loss in below the lows of this initial sell-off, you're already stopped out. Even with good, risk management, you're taking an unnecessary loss. What you want to wait for on RH is for whether or not it can start to bottom, whether it can start to base, and then you can play the breakout. When you get these like sell-offs, for instance, you don't have to keep trying to buy at every one of these big, large candles because those big candles can continue to accumulate and you take on unnecessary losses. You want to wait for a base. Couple more that I want you guys to look at. Smart. This is an instance of a stock that did have a sell-off and it bounced right back up. So let me find it here for you guys. I had it noted on my notes. I may not even be able to find it. Oh, here we go. So this is actually not an example of a stock that bounced back. I do have an example of it. I thought it was Smart, but it's not. So Smart had this huge gap lower. This is the gap. Gap's down, tries to bounce back. A lot of people are probably trying to play the bounce. Maybe you could have made a few bucks off of it if you were, just trying to get a couple of candles out of it. But most people are not doing that. They're trying to get to go right back up to where it was before. And they get the rug pulled out from underneath them, 3 days to the downside of heavy selling. And then you get this base. This is what you're looking for. This is the base that we want to trade off of. So once it can break out of this base right around here, then you get this move from 39.50, and you have an opportunity to run this for a few days before it starts to pull back again. But nonetheless, it's a pretty good move that you could take advantage of there. For the same reason, gaps higher. This is what happens when you start to chase some of these gaps. Doesn't mean that they can't keep running higher, but when you're trying to chase these gaps after a significant news event, you can get caught holding the bag as well. INTC. INTC has had some major gaps over the years, and this can be one of the more frustrating stocks for traders to want to hold. But you take this huge downward channel right here. This goes back to, I think, 2022? And you had this big gap to the downside right here in late July. Initially, a lot of people would have been tempted to go ahead and buy this stock and try to run it right back up, going from 35, 36 to 38, $39, make a cool. But that's not what was in the cards. Instead, it just spent weeks and weeks and weeks, if not months, selling off. And what you had to do on this one is be patient, not try to get in on that initial gap down, because what most people try to do is they do that and they lose big time. Where you could have ended up getting in is when it finally started to base right around here. Look at this nice basing pattern that was forming. And then you get that gap above it. You can get in at that level, and then you can play it to the upside. But what most traders do, they try to get in here, and then they end up finding themselves backloading. The same lack of discipline that causes you to play the gaps is the same one that usually causes you not to use stop losses. So it's twofold. You're getting into a bad trade, and you're not using discipline in the bad trade. Let's see here. Snow. I want to look at Snow here as well. This is the example that I was trying to remember. Snow actually had a pretty good gap down. Yes, here it is. Snow had a gap down and it bounced right back up. But look at the examples I show you. And these examples aren't hard to find. I'm not like scouring or running algorithms to try to find examples of gaps down. I'm just looking at the first gap that I see, and I'm putting them in this video as an example because, they continue to prove why you don't try to play these gaps on a regular basis. So Snow had the gap down. If you bought it pretty much at any point, you quickly made your money back. But these kind of moves here, they're not normal. They don't tend to happen a lot. And the reason why I show you this is to not make you think that I'm right in every situation. I'm not. But what I want you to see is that the majority of the time, these things take time to base and try to work themselves out. And you'll see these kinds of moves, and you're like, oh, I knew I should have gotten into Snow. Why did I to show any kind of prudence or show some hesitation there? I should have gotten into it. I'm going to do it next time, and it's the next time that ends up burning you. All right. I'll give you two more examples, and then we'll go to your questions here. First one's being Oracle. This is the big gap down today. People buying it? Absolutely, people are buying it. I've already seen people buying it. Is it the right move? No, because you don't know where it's going to finally start to base for you. To assume that it's just going to go straight back up to the 120s is a fallacy. Yes, it could do it, but it's not a substantiated reason for being able to get into this trade. What you want to see is, can it do some basing for you? And right now, you're not seeing any basing. You got this massive gap. You have a huge double top that's been confirmed. Draw that for you as well. And there's the potential for this stock to move all the way back down, especially if you get a lot more market weakness. You can see this one move back down to the 90s, mid 90s. So there's pretty much no support for it until it gets to that level. So I would wait for this thing to start carving out its new layer of support, or for it to come back down to this level and show that it can bounce. But I wouldn't just be trying to catch a fall. That's where you get yourself all cut up. Finally, let's look at PayPal. This is the one that has gap after gap after gap, and it's probably the best example of why you don't play the gaps, because all this thing does is gap and gap lower. It used to be a good stock, but now, man, if you're playing it, you got to play it for some real short-term gains. You definitely don't play a gap lower. But here's one major gap. It never came back from that. You have more of them that's taking place. You got another one right here. I mean, a lot of these come from earnings reports. You have another one right here that I highlighted from May of this year. You got another one here that just recently happened in August. What's the main theme in all this? They haven't really been bouncing back. Now, what do you notice here? You notice here that after this gap, it formed a little bit of a basing pattern. I actually played this basing pattern and it made, I don't know, I think I made like 3 or 4% or 2%. I don't know. It was in the single digits. I don't think it was over 5%. But nonetheless, it broke out of this base, gave you a little bit of opportunity to play. Now, would it have been right to get in right at 869 when as soon as it gapped down? No, you would have been losing money for a long time before it finally came back around. What's interesting is that PayPal's forming a similar pattern here as it did before. You got this initial wave down, you got a little bit of a dip lower, and then it comes right back up. Same thing here. You got the initial wave down, a little bit of a dip, and now it's trying to break out once again. So watch this level here. This might be the time where you can finally play PayPal as after the gap from early August. And if you would have played it right out of the gate, you would be looking at losses still. So that's why you don't play the gaps. Gaps are a disaster for traders. They cause a lot of problems. They cause a lot of heartache when you have to get right in right away. You're always better waiting for some kind of consolidation in a basing pattern. So hopefully I didn't give you too many examples there, but sometimes you got to do that in order to nail the point home. All right, we've got some questions from you guys here. We've got the regulars eat my... I'm not going to say I don't know if YouTube hits me up for that or not, but anyways, yo. Anyway, all right. Eric Duvall, can you look at Meta? Yes. Oh, man, you're going to make me look at Meta. Okay, let's look at Meta here. That is a sore spot for me. And I'll tell you why. Let's see. That's what is that? A 3-day chart? We don't want that. We want the intraday chart. So Meta back on September 7th, I was enjoying this trade. This was a good trade. I had gotten in. It was a nice basing pattern. It was breaking out. It was up 2% on the day. Life was good. And then this happened out of absolutely nowhere. I still don't know what caused this. I don't think anybody knows what caused it except probably the person who hit the trade to sell, or the button to sell the trade. But it was like 3-4 million shares that came in hot. And it took me out. I went from being up 2% of the trade to taking a 2% loss on the trade. I don't know if I've ever had that happen before with that big of a company that was once $1 trillion company. I don't think that's ever happened to me before. And so it was discouraging. And that's part of trading. That's what causes people to stop using stop losses. They'll say, oh, I was stop hunting. I wasn't stop hunting. I'm not a big enough of a fish for somebody to say, hey, let's go take out Ryan Mallory's stops. No, nobody's doing that. But they did drive the stock low enough for me to go ahead and sell my shares. They're stunned. And then, of course, it comes right back up. So what's one of the lessons there? People will say, hey, I don't like stop losses. I don't believe them. They just hunt for you. No, I still use stop losses. I swear by them. I'll continue to always use them. So you had this basing pattern. This was the day that I got stopped out. So like I said, it's a little bit of a sore spot, especially following this candle. I was kind of cheering against it today. I was like, yeah, why don't you just go straight down? Make me feel better about getting stopped out. But nonetheless, here you are. You got some support at this 299.30 level. It's holding all the moving averages for now. What you want to see Meta do is hold the support level. If it doesn't do that, let's say it takes out those lows where I got stopped out at, that would be around 292.22. If it takes out that level, I think that would be a red flag to go ahead and move on from the stock. You could see that tomorrow if the market sells us as a result of a very hot CPI reading, or it could just even be an inline reading that still people want to sell. It could happen. We've seen hot CPIs that get bought up. You just never know. Yeah, I think you do pay attention to the volume on the sell-offs. Let me move my head up here, blocking myself. But yeah, you do pay attention to the volume on the sell-offs. If it's a light volume sell-off, there's a better chance that it's going to start to bottom sooner than a stock with a heavy sell-off, because those heavy sell-offs usually implicate that there's more emotions, that there's a lot of panic in the stock. Now, I'll also say this, is that sometimes, following an extended sell-off, let's say you've been selling off for 3 or 4 weeks, and then all of a sudden you get that really strong volume bar, that's usually a good sign that the stock is starting to bottom, that there's some capitulation there. But when you get these like one-off events where you just sell off really hard, volume definitely does help. Thoughts on the ARM IPO? I'm staying clear, but the hype is real. Yeah, I don't really know too much about it. I guess I'm not involved too much in the hype here, but I don't think that's even out yet, is it? Like I said, it's not yet out. Here's my thoughts on the IPOs. I rarely see an IPO do really well out of the gates. We'll go back to Meta, for instance. Usually, I think you give it like 3 or 4 months on an IPO. People get caught up in those IPOs and they lose their highs. There's a reason why I don't know much about what's being IPO'd right now, because I have no intention to ever buy it. Now, you take Meta, for instance. This is a monthly chart. I had to go put on the monthly chart here. But right here, you can see that's a significant push lower the first month that it traded. Yeah, you could have gotten in on the IPO at 42, but it went all the way down into the teens, like $16, $17 a share. If you were looking to hold this long term, do you know what a difference that makes in your portfolio long term, buying a stock at 17 instead of 42 when the stock's now trading at 300? It's a big difference, huge difference. So Meta sold off initially. You take something like let's look at Airbnb, and I don't remember exactly what it did. Yeah, it actually did pretty good out of the gate. I thought that one might have been one that did so. Uber sold off initially. I had a good second month, but then it just, you can see it just went traded sideways for a long time. I'm trying to think, we haven't had a lot of IPOs lately that have been really well hyped, but if I'm just looking here, trying to see some. I'll list the stocks here. Oh, Snapchat. Snapchat was legendary. Look at this one. It IPO'd at 22.53 or when it opened up to the public, 22.53. It goes all the way down to 5. It never looked back. So the point is, whatever the IPO is, if it runs out of the station really fast and it just takes off, okay, tip your hat and say, you know what, best of luck, longs. But for me, I say on the IPOs, give them like 4 or 5 months at least. Let them get some price action so you can just get a feel for where the stock's going, because you don't want to get into a Snap. You don't want to be so hyped up. Snap was a very hyped IPO and it dropped 75%. That's not something that you want to see. All right, can you chart the DAX and the Dow? Love to hear your opinion. Okay, I haven't done the DAX in a while here, but let's do the Dow. And while I'm doing that, I'll have the trading view launching here, because I think I have to pull up the DAX through there. I hardly ever do the DAX, but more than happy to do it nonetheless. All right, so BIA. So one of the reasons why you don't see me have any lines on my Dow chart is I don't usually chart it, for the main reason because I don't really feel that it's a index worth following. And the reason for that is that I'm giving you a lot of reasons for that, but it's price weighted. It's not market cap weighted. So the stocks like UNH has a way bigger influence because UNH is trading at $479 a share versus Apple, which is trading at $176 a share, has more than twice the influence, like 2.5 times the influence that Apple has, simply because it has a higher share price. Doesn't mean it's a bigger company, but the Dow will weight that more heavily. So if UNH is way down and Apple is way up by the same amount, UNH is going to be dragging the Dow lower because of its higher share price, not because it's a bigger company. When you take the S&P and the NASDAQ 100, they're market cap weighted. So just wanted to say that right out of the gate. You have this nice rising trend line here. It needs to hold this level. This goes back to October low, so it's a pretty decent trend line so far. You can see where it's flattened a little bit on us here over the time. At first, it was kind of like that trend line, and then it broke. So we're now looking at this kind of a trend line now going forward, just a slight adjustment. Let's see here. Got a little bit of support right there I'd watch. So if this trend line does break, watch support on DIA at 342. And why am I using DIA instead of the Dow? It's because DIA is the Dow ETF, so it's a lot easier from a management standpoint of being able to chart it. You also have a little bit of declining resistance. Be mindful of that one right there. So essentially, this is how I play it. If it breaks below the support level, it's bearish. If it breaks back above this declining trend line here, it's bullish. So about 349 to the upside, it needs to breach 349.81. Let's just say 350. To the downside, if it breaks this key support level here at 342, it's bearish. And then the DAX, I can pull up the DAX here. Takes me a second to pull it up. I think the last time I charted this might have been when John asked me to chart this one. So we talked about the last time there being a little bit of a topping pattern that was unfolding. And so far, that topping pattern is still intact. You had this resistance overhead at a 16,341, couldn't break through it. This looks to me like very much a topping pattern. I would watch for a break below 15,464. Is that about right? Low, yeah, 15,468. That would be bearish. That would be where the topping pattern is confirming and where you have a much more heightened chance of a rollover for the index. Kind of boring though, for the most part. If you just go back to March, it's just been trading sideways, hasn't been doing too much. What is this little thing here? Headline for DAX, European stocks on Tuesday, negative. Yeah. So that's it. So Disney has been on the radar a lot of late. Not so much for me, but there's some other folks in the trading block that has been getting into it. I think it's got some interesting developments taking place. Two of them in particular. You can ignore all the other noise for the time being, but this yellow line and this blue line, those are the two lines I want you to pay attention to. This is a weekly chart. This goes back to 2014. You have this blue line from 2014 going all the way across. You can see it touches three lines here. This support level, you got this support level right here. This comes from 2020, and then you got it just being tested last week here again at the 79 level. So far, we've gotten about a 5% bounce. Not bad. But you also have this resistance layer, this yellow line going across as well. This isn't as clean of a resistance level as the blue line was as a support level. But there's a number of times where we bounced off of it. You have this initial one. You have a little bit of that same action that acted as support here. Is the following candle acted as a little bit of support there in 2020. Again, here in late 2022. And we broke through it. So now when I zoom in on this thing, hopefully I got it all for you here, right? Did I zoom out? I probably should have done it like that. I think I might have been blocking some of it. But this is essentially what I'm talking about here. You got this support levels here, here, and here. Sometimes my big face covers it up. But yeah, so you got this resistance. It's going right up to this 83 level, and it needs to break through it. It looks like it might be a shade above it right now, but it needs to still get back above it and sustain that move on a weekly basis. Because remember, this is a weekly chart. It hasn't finished the candle yet. And thank you, John. Appreciate the tip. Don't get a lot of those, but I do appreciate it. That always means something to me. So DIS, keep that in mind. 83.68. Can it hold this breakout into the close? I wouldn't even call it a breakout. I don't want to say that. It's recapturing a resistance level, now making it support. That's the big thing. You also may have like you could call it like a morning star candle pattern there, where you have like a doji followed by preceded by a big red candle, followed by a big green candle. Those can be a good bullish development, can oftentimes mark the bottom of a pattern as well. Alpha, thanks for giving me that. I'll pay attention to the ARM one, and if you come back next week, we can tackle the ARM IPO and give you some more thoughts on that. I really don't mind doing that at all. But watch what I'm talking about on that. I think you may be surprised to see that exact thing happens, where the IPOs get overhyped, and then when they actually start trading, they sell off. Any interesting swings to JPM at 142, stop loss 139? That's good. I think the JPM swing is actually a pretty good one. I was watching this one. This is what I like about it. When you go back and look at the sector ETF, you're getting a little bit of a breakout action here. Now, there's a lot of wishy-washiness in stocks of late. For instance, I'm in MU right now. This was a good trade all day long. And the last 15 minutes, not 15 minutes. It was like the last hour and a half trade. It just completely dumped on me. But I mean, I still finished up 0.4% higher on the day, but it's still frustrating. I mean, I wanted to be more towards here rather than there, but you know, I'm still following the price action. I still think things are good, but it can always be frustrating when that happens. So also make sure you guys are liking, subscribing. I always do appreciate that when you guys can do that. And speaking of XLF, and this pertains to JPM, you have a cup and handle pattern right here. So this is your cup, this is your handle. You have the declining trend line. It's trying to break out of it. That looks pretty good to me, guys. So that's really what I'm trying to watch for here. For this breakout, see what it does going forward. And in the meantime, JPM holding this support level right here, going all the way back to what, March of 2022, held it pretty well. And now it needs to just get back above it and then try to make a run for this retest at around, I'd say about 155. If you can get back up there, that would be a phenomenal swing trade, because you can put the stop loss below these lows here from Friday. That would be below 142.65. I think Black Mama, you said what, 139? Let's see here. Yeah, I think you can pull off 139. I'm not sure what the technical basis is for 139. I think for me, I think I might even just put them like below 141, 44. I'm not telling you what to do or what you should do, but that's how I probably would play it. And then, yeah, the chart today, candle today, that was good. It was one of the few sectors that were actually trading higher today. So tip of the hat to you, man. Thank you, Alpha. I appreciate you sharing some kind words there. Overall, CPI report tomorrow, that's going to be key. I think what happens with, you know, the tech response to it, because tech has been really lollygagging of late. It's not been the easiest trade to take on. I've taken it a few times and haven't had a lot of success doing that. Oil still remains extremely hot. Oil has been really nice. That's probably like where most of my gains are coming from right now is oil. Nothing else is really working on a consistent basis like it. You're seeing some themes with the cannabis. You're seeing some also with uranium. Those two sectors or industries are doing pretty good as well, but they could be getting a little bit tired as well. I think oil might be getting tired, but I keep raising the stop loss and it's not triggering it yet, so I'll just keep riding it. So all right, guys, take care and God bless.